So one of the things I get asked all the time is, how do I keep my trading as simple as possible? And is it possible to just use one time frame to look for entries and exits? And the truth is, yes, absolutely you can. To do this, you need to understand the two important concepts. Number one, liquidity, and number two, dealing range theory. If you're new here, my name's Ali Khan, and I've been trading for around 10 years, and 8 of those years I spent learning and dissecting algorithmic price action, ICT and smart money concepts, and I developed something known as dealing range theory, and now I'm teaching it publicly. Now I'm going to quickly go over this example. I actually took a trade this morning as well on Euro, so I'm going to break that down. But first I'm just going to show you a quick clip that I posted on my Instagram story explaining my thought process before the fact. Just on the charts, looking at the dollar index at the moment, you can see these two equal highs over here, and then we have two equal highs over here as well. Price has currently reacted from that 50 DRT level, and you can see the inversion gap there. So I'm looking for price to run higher to read the buy side liquidity above the dealing range high. Now, obviously, in that video, I'm explaining what's happening here in the New York session between 7 o'clock and 10 o'clock. What I want to first do is I want to look and observe what actually transpired in price. So essentially, I can clearly see here that we have equal highs above the market. Automatically, my eyes are going to go to this as a potential draw on liquidity. Now, the lowest low inside of all of this range occurred here in the London session. Now, prior to these highs and lows forming, we can see that we had the Asian range high here. This is a key liquidity pool because it's inside of the Asian session. And we have the Asian low down here at 8 o'clock. Now, in the New York session, I've got the benefit of looking at what transpired in London. And it allows me to, number one, see what price has already done, where it's already visited, and number two, where it's likely to visit next. Now, I'm just going to remove all of this. And the first thing that I'm going to look at is what happened inside of London. Where is the London key liquidity high and low? And we can see that this is London's high, and we can see that this is London's low. Now, this low here is going to be our new dealing range low. Why? Because we raided sell side of the Asian liquidity and also this small short-term low down here. It's also worth noting that this low down here, we didn't actually close below it. So that's one clue that first the market is going to turn around. And we obviously see that transpire throughout the rest of the London session. Now, the parent dealing range high is going to be these equal highs up here. But I'm more interested in the London dealing range. So from the London's high and the London's low. Now, what this allows me to do is to mark my dealing range levels or my DRT levels, right? For those familiar with dealing range theory, these relative equal highs up here, we can class this as a type 2 dealing range. Now, I'm just enlarging this a little bit and let's see what actually happened. After we made the low in London, and again, if you're familiar with my work, between 3 o'clock and 4 o'clock is where we anticipate a turn. And this came in at 10 minutes past 3, so within that 3 o'clock macro. We then see the market reprice higher. The first thing that I'm looking for is, do we have the legs to close back above the 25 DRT level? And we see that here, right? And do we have the legs to get up to the 50 DRT level? And we also see that. Now, the market obviously doesn't close through that 50 level over here. We drop back down and we start consolidating around that 25 level. And then we see the market displace higher. Notice at that 50 DRT level, we leave this fair value gap, right? The market then drops into the consequent encroachment. It nails it, overlapping with the 50 DRT level. And then we make a run for the highs. Now notice this is outside of the London session. And we don't take the initial high here. So the market goes into a holding pattern. This is time distortion between kill zones. Then at 7 o'clock, the macros kick back in and we see this movement lower, completely balancing this fair value gap. Now, if we look left, we also have a fair value gap here, right? This area is balanced. And notice the bodies of the candles here, they do not close below the consequent encroachment of this sell side imbalance. When I'm bullish, I want to see the bottom half stay open whenever I see anything like a balanced price range or an inversion fair value gap in this case, right? And then what happens? And then we see the market turn around and run and close through, again, the 50 DRT level and this buy-side imbalance. We then nail that 50 DRT level right there, and then we run higher. Again, stay inside of this pocket. What's happening here? We're building layered buy-side liquidity, right? Now, above that 50 level, we also have this small fair value gap here, the sell side imbalance. Now, notice what happens here. This is the beginning of the New York session here at 7 a.m., right? We drop lower and we clear sell side and balance this area of price. And then the market turns around and it goes back through this sell side imbalance. This becomes an inversion fair value gap, right? Look at the bodies there. They're telling the story that the market doesn't want to drop any lower, and then we nail the 50 level and run higher. And then we drop back down and again nail the premium high of that inversion fair value gap. Inside of that inversion fair value gap, you see this down close candle. This is our high probability order block. Now, what time does this occur? Between 8:50 and 10 past 9, we have a macro that forms. Where's it going to reprice to? Higher, to all that buy-side liquidity that was engineered between London and New York, and then ultimately the parent dealing range high in the form of the equal highs up here. I'm just going to show you here a screenshot of the entries that I took on Euro. But I was actually watching the dollar index and basing my entries of what I was seeing unfold here in price, because for me this was a much cleaner price action. And essentially what I was aiming for was these relative equal lows down here and the relative equal lows down here. So this would have been our dealing range low. Now, because we had this huge move here, and this was basically when Trump tweeted about the Iran war. Now, I ended up closing this trade manually over here. I still think that we're going to come down and fill in some of this, but because we're inside of all of this consolidation right now, I didn't want to really overstay my welcome. And you can see how we really traveled back higher. This is another entry here inside of the London session, London close. And you can see how like the market's now turning around as well. And that's coming in again, 10:50 to 11:10. So you're going to get another macro that forms here inside of the London close session. If you see where we currently are right now in price, if we drop down to the 1 minute time frame here, because this model is so universal, it can be applied on any time frame because price is fractal. Here we have equal highs. This is our, again, another type 2 dealing range. And we take the high to the low, and you can see right there, that 25 DRT level. I want to make this a little bit thicker. But you can see from the high to the low at the 25 DRT level, what do we have? We've got this suspension block, and the consequent encroachment of that block also overlaps with the 25 DRT level. There's another entry. Now there's another macro at the 30-minute mark that will spool price and run through to the lunch session. So I suspect these highs will be attacked next. But if you're looking for a really simple, easy model based on one time frame and looking for only a few little moving parts, then there doesn't come really better than dealing range theory and understanding liquidity concepts. You don't need all the higher time frame arrays, the blocks, the order blocks, the breakers, all that kind of stuff. It's good to obviously have knowledge on that, and throughout the rest of the year on this YouTube channel I'm going to be giving you a whole lot more detail and insights on those specific things anyway. But my real goal here is just for everyday people who can really understand higher levels of algorithmic price action, but very, very simplified. And this is why I intend to do with dealing range theory and why it was created in the first place. So if you want more videos like this and you want me to continue doing this kind of stuff, then please like, subscribe, and hit that notification bell so you don't miss any future stuff. I hope you found this one insightful. Thank you for watching, and I'll catch you in the next video. So I came to edit this, and I thought I'd just do a quick update and show you exactly how we ended up raiding the equal highs on that type 2 dealing range high, and how we utilize the DRT levels coupled with inversion fair value gap. So we had the suspension block here on the 25 DRT. Price traveled through it all the way into this buy side imbalance over here, again showing a willingness to move higher. It wasn't quite ready to raid the highs up here and then retrace back into the 50 DRT level, coupled with the inversion fair value gap here, and then hovered between the 50 and the 75. So we just touched it right there, and then retraced into 2 down close candles here, nested at that 50 DRT, and note at what time this reaction comes in. So we have 12:50, and then we have 10 right over here, and you can see the subsequent reaction at that macro time. So we can utilize these DRT levels with time, liquidity, and inefficiencies, and this gives you a real X-ray vision of what the market is actually doing without having to overcomplicate everything. And this works across all asset classes from all time frames. This is very much a universal model, and the precision that you can see is always quite staggering. So the more you study this and the more you research it, the better you will get at identifying how these dealing ranges form, how to plot the dealing ranges, and where high probability setups are going to form in relation to time inside of these dealing ranges as well. So that was just a quick bonus for you there. Anyway, I'll catch you soon.